Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq, with daily insight on the Nasdaq-100 Index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me today, we have Ben Jones, product specialist with Nasdaq's index research team, to discuss Nasdaq 100 performance. With Ben, just 7 trading days to go in June. Where did this quarter go?
I don't know, it has certainly flown by, right? I mean, it's amazing that the end of June is near. We're going to cross off another quarter, Q2 2020. And overall, I mean, the performance has been, quite robust across the market, Jill. So, yeah, time has flown by for sure.
It really has. And we can see that in your first chart here with Nasdaq 100 X-Tech, which is interesting because typically we talk about the Nasdaq 100 as the tech index. So I think it's interesting to see that you're looking at something a little bit outside of that.
Yeah, it's something a little bit different, and you provide some perspective on kind of different components and segments of the marketplace that's not just defined by, let's say, what you see in the traditional Nasdaq 100, which is pretty much over half, like to say 57% of the Nasdaq 100 is technology. So it gives you a good idea when you look at the Nasdaq X Technology Index, which again is basically the same Nasdaq 100, except removing all those technology companies. You're able to see some of the drivers of the market returns lately. And if you think about the market in general, right, the past week we see another week of robust returns across all the major market indexes, right? We're up for the week. The Nasdaq 100 up over about 3.5%. That's through the close of, let's say, last Friday to today. The S&P 100's up, small, mid cap up as well. What's interesting though is that when you think about kind of what has really driven the returns this month, right? So just think June, right? The last month of the quarter, it really has been from some of the laggard areas of the marketplace, right? And so if you look on the chart on the right-hand side, it basically tracks the total return of 3 indexes: the Nasdaq 100, which is the traditional 100 index, the Nasdaq 100 X Technology, again removing all those technology companies, and then the S&P 500. If you look at the X Technology Index, you can see it's been outpacing the S&P 500 as well as the Nasdaq 100 this month. So it's a sign that you're beginning to see some participation from other areas of the market, not just technology. And so the X Technology Index is roughly, 38% consumer services, 23% healthcare, 17% industrials. I think the industrials is an interesting component because it's only about 5% or 5.38% in the Nasdaq 100. So it's a good sign, right? So this month has really been typified by other sectors participating. But again, if you look at the long-term track record of these 3 indexes, the Nasdaq 100 has been the dominant one. That's the graphic on the left-hand side, where the Nasdaq 100 is up over 449% the past 10 years, while the X Tech is 273. The key is that over the past 10 years, both of the different Nasdaq 100 indexes are outperforming a really tough benchmark to beat, and that's the S&P 500. And we even see that this month, right, where X Tech and the Nasdaq 100 are leading the S&P 500 as well.
Yeah, it really is quite glaring just how well the Nasdaq 100 has outperformed over the past 10 years when you see it in this context. Let's take a look at your last couple of slides here, if you can walk us through them, because you're taking a look at volatility relative to the Nasdaq 100.
Yeah, I think it's important to discuss volatility, which a lot of financial advisors use to discuss kind of risk, right? I think there's a misnomer that the Nasdaq 100 is an extremely volatile, choppy index, and that's just not the case. Maybe if you went back, 20 plus years, at the height of the tech bubble, yes, it was a very volatile, new part of the market. But as you can see, as we look at kind of, trailing 1 year, standard deviation data, volatility data going forward in time, volatility has really subsided, and the two, Nasdaq 100 and the S&P 100, have kind of tracked each other pretty closely from a volatility perspective. You can see when this chart spikes and jumps, those are periods of heightened market stress, heightened market volatility, where risk is high. You see that spike in the mid, about 2008 time period. You've seen a spike lately. But what's interesting is that during those times of market stress, the Nasdaq 100 and the S&P 100 really track each other really closely and tightly, during those periods. And in some periods, you often see the Nasdaq 100 actually experience a lower standard deviation than the traditional market benchmark. So right now they're tracking each other pretty closely. So I think it's important to discuss that, because while we've seen long-term performance track records favoring the Nasdaq 100, You also see a volatility profile that is roughly in line with the market. And then finally, when you look at the next slide, I think this is the story. This is when the two come together: return and risk, return and volatility. The orange line basically tracks the excess return, the one-year excess return of the Nasdaq-100 versus the S&P 500. And that other blue line basically tracks the difference in volatility during that period. And what you can see is that when it's above that, gray line in the middle, or kind of that lower third, it's outperforming. The Nasdaq-100 is outperforming the S&P 500. It's been quite persistent. You see there are periods where it underperforms in the mid-2000s, for example, briefly in 2013, briefly in 2016. But more often than not, going back in time, the Nasdaq-100 has outperformed the S&P 500. In addition, you can see that the volatility, there's not a big difference, right? You can see how it likes to hover within that 0 to plus 5% range. And really, since the beginning of last year, again, beginning of 2019, the volatility has actually, moved closer to zero, where basically the S&P 500 and the Nasdaq-100 have been tracking each other from a standard deviation, standpoint. So I think that's an interesting observation that we see positive excess returns. And we actually see the Nasdaq-100, which is just 100 stocks, experience, basically the same volatility profile as the S&P 500 right now. And I think when those two stories, move in tandem, it's an important thing to remember when thinking about the Nasdaq-100 relative to other benchmarks.
All right, Ben, great stuff as always. Thanks so much for joining me on Trade Talks.
Thank you.
All right, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.